It's Thursday, May 12th, 2022, and we're looking at NASDAQ, NDX in particular, with a liquidity drops 3 out of 4, an IV rank of 95, almost 96, so we're looking to sell some premium. It looks like the cherry bomb from Tasty Trade wants us to neutralize some of our probably bullish deltas at this point, because it's probably time to neutralize those. Yeah. So let's go ahead and get into Thinkorswim. If you're not interested in this trade, have a wonderful day. If so, I'll see you on the inside. Hi, everybody. My name is Neil. This is Option Theory. Thank you so much for joining us. On screen here, you can see we have the chart pulled up for NDX, the index fund that tracks the NASDAQ 100. And we can see here the drop that's been going on basically since, what day was that? March 29th. And tough day if you got in on the market there, right? Not tough day, tough couple of months. So a month and a half. Anyway, let's see if we can't neutralize some deltas, shall we? So let's go to the Analyze tab. I've got the trade already put together. We're looking at NDX. And by the way, stick around to the end. It does help me, and I have an alternative trade for you in case this is too much of a position size for you, or you just like different products. So NDX, June 10th weeklies with 29 days to expiration as of today, May 12th. And the strikes that we'll be looking to sell is the 12,750 and buy the 12,775. So it's $25 wide. We're looking to collect $810 in credit. That's a nice size credit. One of the things to, of course, point out, weeklies are always bad for liquidity. Look at the numbers of open interest and look at the width on these bid-ask spreads. I don't love that about this underlying. Thoughts on that one? Crew, I'd love to hear from you. All right, so let's go ahead to the risk profile and take a look at our probabilities of profit at expiration here. I've gone and done all the hard work for you. If you watch any of my videos, I explain how to do this setup here. But we've got the break even here set at expiration, price slice here. So we're looking at a 72% probability of profit at expiration. Well, what's our max profit? We know is the credit we would receive, $810. Subtract that from the $2,500 of max risk, and you're looking at a $1,690 is the max risk on this one. So there you go. That's not, not awful. But maybe that's too big of a position size for you. We're, of course, going to test out these trades because that's what we like doing here. Let's go ahead and throw this one into the IRA because, man, the IRA could use some luck these days. Let's see if this has got some good luck for us. Go ahead and throw that into the IRA. And I want to pull up, if you stayed this far, we're not at the end yet, but I do want to cover that alternative I have for you here. So let's switch over to Tastyworks. Take a look at that alternative that I have pulled up for you. Get that to fit on screen. And all right, so looking at the Qs, right? Compare the Qs to the NDX. You'll see they're essentially the same. However, what we'll get here is 4 drops of liquidity in the Qs. All right, and I've got pulled up a position in the June monthlies with 36 days to expiration. Of course, you can go with the weeklies, but I prefer to go in the land of monthlies where we have better liquidity. So if I open up that expiration here, you'll see I've got the trade put together. It's the same short call vertical, just same strategy, different strikes, of course. We're looking at, in this case, selling the 310 and buying the 315. That's a $5 wide. We're collecting 1/3 the width of the strikes here. We got a max loss of $333 and a P50 of 80% of making half of that credit somewhere in the next 36 days and a probability to profit of 74. So I wonder which of these two trades you find interesting or worth trying. Love to hear from you in the comments. Thank you so much for watching. I appreciate from my small YouTube channel to you. I appreciate all your likes, all your subs. Any comments are always appreciated. I will try to respond to all of them. Thank you so much for watching, and I'll see you in the next video. Until then, may the market be with you.